All right, let's take you through the economic impact of this war. We're looking at West Asia going up in flames, and the oil and all of it, the currency and whatnot, going into an absolute dizzy. Well, Iran is currently being targeted. We have lots and lots of oil that we purchase from Russia, from Iran. But at this point, we aren't able to really put our fingers on that. In fact, if I could request my panelists to get me on to the economic impact of it. All right. Well, this is no longer just a military story. This is an economic earthquake. The US and Israel have struck Iran. Iran has retaliated across the region, missiles in the sky, ships on fire, ports under threat. But we've got to wait and pause for a moment to see if this was really about a regime change. Was this only about missiles and nuclear weapons? Well, there's a lot of talk around China and China's relation to this entire war. Nearly 90% of Iran's oil exports go to China. Add Russian oil, Venezuelan oil, all sanctioned, all discounted, all flowing to Beijing. Cheap energy powers China's factories. In fact, cheap oil keeps exports competitive. Now imagine that tap getting disrupted. Is this also a strategic squeeze on China? That's what many ask. Because if Iranian oil stops flowing, China loses its cost advantage. Manufacturing becomes expensive for China. Margins start shrinking. That changes global trade equations. Now look at the narrow stretch of water. The Strait of Hormuz, 1/5 of the world's oil passes through here. And today, it sits in an active war zone. Over 150 tankers are anchored. Too afraid to move. If this shuts, even partially, oil prices will explode. Goldman Sachs warns that oil could touch nearly $100, even $130. Well, that means petrol prices would skyrocket, gas prices will rise, shipping becomes expensive, everything you buy will become costlier. Markets are already reacting to it. Stocks fell across America, Europe and Asia. In India, nearly 6.5 lakh crore of investor wealth was wiped out in a single session because markets hate uncertainty and this war screams uncertainty. Now let's bring it home. India imports over 80% of its oil. If oil prices rise, India pays more dollars. That puts pressure on the rupee. A weaker rupee makes imports even costlier. That's imported inflation, literally. Transport becomes expensive. Food prices rise. Air tickets rise. Goods cost skyrocket. India right now is in what economics call a Goldilocks phase. Steady growth, controlled inflation. But this external shock, it was not fully priced in. Iran is also activating asymmetric warfare, harassing tankers, backing Red Sea disruptions, threatening shipping lanes. This clearly isn't just battlefield warfare, it's economic warfare. For India, speaking of our homeland, if this conflict stretches 4 to 5 weeks as Trump is predicting or suggesting, the economic tremors will really grow much louder. Oil, inflation, currency, markets, India will be bearing the brunt as many of our neighbors in West Asia. Let me quickly bring in Jayant Dasgupta, former ambassador of the WTO, also Shubhomoy Bhattacharjee, consulting editor with Business Standard. Thanks very much, both of you. Ambassador Jayant Dasgupta, would you come in on that? Markets that could go into a tizzy. Give us your sense on this global economic impact the war will have.
There are going to be two very large scale impacts. The first one you have outlined would be because of the supply of oil getting squeezed, because from the Middle East, unless the war stops on one side, namely the US and Israel, gain total dominance and can open up the Strait of Hormuz without any interference from Israeli drones or loitering munitions or any of the other things. Only in that case, the oil prices could start climbing down. already there are indications that oil prices have gone up to about $82 per barrel. And as you mentioned, they may touch about $130 per barrel, which would mean a huge amount of inflation in oil-dependent economies like India, which buys about 86% of its crude oil from abroad. Now, if we decide to buy from the Russians more and more crude, it will also not take place overnight. It will have to go through a very long circuitous sea route to come to India, unlike China, which has a pipeline. So it is not going to be easy for countries like India to overcome this inflationary pressure, huge inflationary pressure. So that is one aspect. As you mentioned, food prices will rise, transportation costs will rise, and all of this will add to the inflationary pressure. The second point is that a lot of our trade takes place through the Strait of Hormuz and to the countries of the Middle East. They are large markets for Indian products. So that is also likely to get, it's already stalled. But if it doesn't get revived within the next 4 weeks or 6 weeks, then there would be implications in terms of job losses, in terms of overall constriction of the export basket of India. And similarly, 35% of our foreign exchange remittances come from the Middle East. So if the Middle East is up in flames, many of the industries are not functioning, then there would be job losses in the Middle East as well for Indian workers, who would be the first to be laid off and or put on hold, benched, if I may put it that way. And it will have an impact on remittances as well. And if you look at the whole situation about current account deficit, mainly it has been possible for India to overcome that through foreign remittances. And that is something which, again, because oil prices will go up, our import bill will go up, and the current account deficit will balloon because our exports will come down. And foreign remittances also would not be there to reduce the current account deficit. So it is a very grim scenario if this war continues for 4 weeks, 6 weeks, or even longer. As many experts are saying, that it's not going to be easy to effect a regime change in Iran. As the British Prime Minister has also mentioned, regime change from the skies is not going to work out. So we are keeping our fingers crossed. But the scenario for the future, at least in the short run, is going to be very grim.
Shubhamay Bhattacharjee, are we underestimating the scale of this energy shock? We are not feeling it as yet. Petrol prices haven't gone up as yet. But why don't you tell us, how far are we estimating this damage, or how severe?
Well, already Dr. Dasgupta has talked about a very huge, grim scenario. Everything happening, I'll beg to differ here. Though Dr. Dasgupta has got wide experience, and I'll defer to that. But first of all, let me say, I'm very confident and absolutely confident that retail price of oil will not rise in Indian bunks. You can take that as absolute given. Retail prices of oil will not rise. And there is no reason to rise because India today is the third largest importer of oil. See, the oil shocks of 70s, 80s, or 90s was when India was a very small player in the global oil market. Today, what India and China buys determines the fortunes of the Gulf. Just as Gulf sends large amount of remittances to India, the Gulf also depends on its finances for what India and China buys. It cannot afford to let that market freeze. So yes, both JP Morgan and Goldman Sachs have said in the extreme scenario, it can go up to 130, 120. That extreme scenario is not on the table.
And with the freeze on the Strait of Hormuz?
There is no freeze. Right now, what's happening is, I mean, you have to see how many tankers we every month docks in the Indian ports. There are about 12 tankers that dock at the Indian ports every month. Okay. Of this, less than 30% comes through the Strait of Hormuz. India imports from Russia, India imports from other places. In fact, Indian imports from US will now be absolutely be kept safe because the US is very keen to be pushing out the OPEC and get muscling in through its shale oil into the Indian market. That is what President Trump's bluster is all about. Do you think the American tankers are going to be America is going to be allowing its tankers to be hit? First of all, the drone grade which Iran is throwing up are frankly very low quality, which is why they're in all over the places. The estimate that we are getting from every places is very clear for the year. Goldman Sachs itself, today's report, if you see, it says that the average price of Brent that they expect, today it's $84. So I know that I track oil prices on an hourly basis. It's $84 as we speak. This is going to come down by the end of this month, and it was expected that this year, the calendar year, the oil price would be about $60. It will probably go up to $64. That's it. It has become an oil it's become an oil fight rather than any other fight. Regime change and others, those are some things which between US and Iran, we frankly don't even need to get into it. And we don't even aren't there. For us, the issue is that whether these countries will be pumping their oil and gas to India. Come along. Qatar depends on that gas coming out from their mills to be exported to India. India takes in 50% of its gas from Qatar, but Qatar's 30% of its gas comes to India. If India is not buying, Qatar economy will next day will be it will be a basket case. Same with Saudi Arabia. Same with all these other countries. They do not want any situation where the oil does not flow.
But
so
we hear India has just about 45 days of reserves.
So yes, which is substantial, which is what is essentially the point. That these countries, there will be disturbances for some time till the oil lines stabilize. Look at what's happening in the data. The Dubai market, which was closed, will be opening tomorrow. The other thing that's going to happen is that the markets will now be repricing oil because remember the people who have bought oil, which is the futures market. There are two markets for oil. One is the physical market, other is the financial market. The financial market has gone up because people have anticipated price rise and have brought into the futures. So the futures market prices are high. What you're talking about, what I'm talking about is the physical market for oil, for gas. What happens there? You cannot keep your largest buyer dry and expect to be surviving. Saudi Arabia will be in deep, I don't use the word unparliamentary language, but they'll be in deep problem if they can't sell to India. The same thing happened. And by the way, we don't buy from Iran. Initially, you had said we buy a lot from Iran. We do not buy any oil from Iran. Right from the time the sanctions have come in. We buy only from Russia and other countries. From Iran, we don't buy, and it's been a long time since we have stopped buying oil from Iran.
Okay,
so Iranian oil doesn't come to us, that's not our problem. So essentially what's happening is that the market, if the oil prices sustain at $10 barrel above, it'll be about a 0.1 percentage point hit to the year on GDP growth. But frankly speaking, the impact on India will be much less than what is going to happen, which is the impact on the USA.
All right. So we would like to end on that note, a positive one. And let's keep our fingers crossed until then. I will have you back on our show, Ambassador Jayan Das Gupta and Shubham Moy, for joining us on this. Thank you.